All right, let's get started. Good afternoon, good morning, good evening, wherever you are, and welcome to this CGAP webinar to discuss ways funders can support the development of agent networks in rural areas. My name is Estelle Lahaye, and I will be your host for today's discussion. Cash-in, cash-out agent networks are key to extending DFS, as you know, but providers have struggled to extend these agent networks to customers in rural areas. In recent years, CGAP has been paying close attention to CICO agent networks in rural areas to identify solutions that policymakers, regulators, and DFS providers can implement. But these market actors do not always have the necessary capacity or incentive. And this is where funders can play a role to accelerate the implementation of these solutions. And this is really the focus of today's session. More specifically, in today's session, we will go over 3 questions. Why are agents important in advancing DFS use, financial inclusion, and the SDGs? What innovations are required to support the development of rural agent networks? And how can development funders support market actors in designing, implementing, and scaling these innovations? To help answer these questions, my CGAP colleagues Emilio Hernandez and Alice Negre will join me. In addition, we will have the opportunity to hear from a few funders throughout the session who will share their experiences and perspectives. Before we get to the topic, I'd like to share a few logistical details. There will be a Q&A session at the end. So please feel free to use the chat function in the box to ask any questions you may have throughout the presentation. We will keep the microphone muted most of the time, with a few exceptions, as I said, when we want to feature a few funders to share their experiences. And as most CGAP webinars, this will also be recorded and the presentation will be shared at the end. So going into the topic, who are agents and why are they important? Agents are individuals or companies contracted by financial services providers to act as a customer interface and offer a range of services. They are literally the face of the service. They show customers how to use a given service, provide an opinion on whether the service is worth trying, and troubleshoot problems when they arise. Clients typically open an e-money account with an agent, then use their mobile phone to transact, and then come back to the agent for cashing in or cashing out. Agents not only enable financial inclusion, but also help deliver development outcomes to the poor and underserved in hard-to-reach areas. Being the face of the service, there is trust and proximity between customers and agents, which help drive the uptake and use of DFS. Digital payments generate new transaction data and help expand customers' access to other financial services, such as credits, savings, remittances, and insurance. These additional services in turn reinforce the value of digital payments, providing the potential to integrate cash-intensive users into the digital economy and eventually facilitating a larger digital ecosystem. By supporting the adoption of DFS, agents make it easier for DFS users in cash-based communities to receive remittances, salaries, or social transfers, or pay for goods and services such as healthcare, transport, agricultural inputs, and electricity, for example. For most people to use DFS, they first need access to CICO agent networks to convert their cash into e-money and back. In fact, research suggests that across markets in Africa and Asia, agent proximity to customers has been important for the uptake and usage of mobile money. For example, CGAP surveyed 9 leading DFS markets and noted that the uptake of use of mobile money tracked closely with agent proximity, which is what you see on the graph. These physical distribution channels constitute one of the building blocks of inclusive digital financial ecosystems and drive greater use of DFS, especially among lower income customers. At the same time, the growth of DFS doesn't eliminate the need for cash. And we think there will likely always be a need for CICO networks. Digital payments and cash transactions have been growing side by side in most countries around the world. In emerging markets, in particular, CICO infrastructure has expanded and actually enabled the initial DFS uptake and use. The need for a physical distribution network might not disappear even when DFS grows. In fact, we expect that agent networks might expand, plateau, and decline as more people's income and expense-related transactions are digitized. But if you look at where a few countries in the world where there's been kind of an increase of use of digital transactions, we haven't seen really kind of a decrease in a reduction in the size of CICO agent network. So it's very likely that CICO operations will always be needed. So it's clear that CICO network are an essential building block. However, the spread of CICO networks lags in rural area, where most financially underserved and excluded people still live. A recent BCG survey covering 7 countries found that half of the rural population live more than 5 kilometers away from a financial service point of access, such as a bank branch, an ATM, or an agent. And this is compared to 10% in urban areas and around 19% in peri-urban and dense rural areas. This lag can be explained by the many obstacles to developing viable rural agent networks. Population sparsity, poor infrastructure, and low connectivity drive up the costs of managing agents for DFS providers and limit revenue potential for agents. Yet bringing physical cash access points closer to beneficiaries is critical for delivery of financial services and for achieving development outcome. Let me pause here and see if there's my colleagues from USAID are on the webinar. If they are, I can invite you to say a few words about your views on the role of promoting CICO networks, beyond promoting development goals, beyond promoting financial inclusion, and USAID, it's a priority area for USAID, and it would be good to explain the rationale for prioritizing this area.
Hi, Estelle, can you hear me?
Yes, hi, Paul.
Hi, everyone. This is Paul Nelson. I'm a senior advisor with USAID's digital finance team. As many of you know, USAID was involved in the response and recovery from the Ebola crisis in Sierra Leone, Liberia, and Guinea. Among the issues that the local stakeholders encountered during the crisis, which were many, but among them were the difficulty in getting payments to community health workers and also civil servants that were in outlying areas. So during the crisis, being able to pay your community health workers on time obviously played a part in their ability to support the response. And for the civil servants, many of the civil servants that were outside of the main cities were actually teachers. So in the education, under the purview of the Ministry of Education. And the status quo for them was to receive their salaries in bank accounts. So in that sense, they would theoretically, have access directly into a bank account, which might be, normally a good thing. But unfortunately, bank branch networks or reach is or was very limited in Liberia. And because of that limited geographic outreach, teachers would have to travel, as many of you know, in other countries, would have to travel for hours or travel maybe a couple weeks after they would get their salary to one of the larger towns or to Monrovia, and then withdraw money and then go back to their town. And so when we had the opportunity, we basically recognized that, well, theoretically, a dense liquid network of agents from mobile money providers could provide the geographic proximity that we were hoping to have for people that needed funds, like teachers or like community health workers. And so we actually did have some pilots working with the government and working with a couple of the mobile money providers in the country. This is in Liberia, to disperse payments electronically. So we worked with them through a process of digitizing those payments. But in doing so, we quickly realized that the agent networks themselves were not yet robust enough or reliable enough or liquid enough to ensure that when someone wanted to withdraw their salary, they would be able to. And so for that reason, we realized, okay, we've identified the limitations of the agent network ecosystem as it currently stands. To be able to help address our educational priorities and also our health priorities, we need to address this issue related to the financial sector. And so what we did is put together a packaged set of technical assistance, and some other components were involved, but basically some technical assistance packages for the two primary mobile money providers. And we worked intensely with them to better diagnose what caused their agent networks to occasionally not be very liquid or reliable, or to help them determine where best to build out their agent networks strategically, and then developed some tools that would help them do so. And I know I've gone on a little bit, so I'll pause there just to give you a sense of what prompted us to originally pursue those interventions and the hope that we had in making progress through them. Thanks.
Thanks, Paul. And we'll tap also on your experience later on during the Q&A. I think there's more to discuss about what funders can do and do. So I think it also be good to hear, based on what we discuss later on in the session, your kind of broader thinking about that. But you provided a very good and clear example of how CICO networks can really help promote development goals beyond financial inclusion. And we've seen many times other examples of that. And often there's an assumption that these networks are in good condition or healthy, they're working well, and then realizing that the populations that are targeted through different projects are actually could be better served by these networks. So helping kind of them develop better, I think it's a clear opportunity. And now that we've discussed kind of the rationale for funders to prioritize this area, when it comes specifically to rural populations, let me hand it over to my colleague Emilio Hernandez, who will highlight basically what needs to happen in the market for these CICO networks to develop in rural areas. So over to you, Emilio.
Thank you, Alice, and thank you, Paul, for your intervention. So now I'll start walking you through a little bit about what are the innovations that are being required to support the development of rural agent networks. And to do that, we really need to understand the specific challenges that you see. Through the course of our work, we've been documenting the different evidence base for what are those challenges, those very specific challenges. On the demand, and there are several, we categorize them in 4 groups. Why is it so hard to make agent networks work in rural areas is very related to key characteristic of rural areas, which is low population densities, right? So any agent that you put will have a catchment area where there are fewer people because people live very spread out. In the context of sub-Saharan Africa, this is a bit of a puzzle because still in many of these countries, most of the population live in rural areas, but the extensions are so vast that the density of that population is very low. And so you can have an agent that lives in a rural community and catches very few customers, and those customers may have demand, but there are too few for that individual agent to make enough transactions for it to be viable and for the provider to offer the service day. So those that creates this effect of a low demand, and which has historically translated in rural customers being very unaware of the financial service offer that's out there. And there are also social norms that prevent many of vulnerable rural groups to participate, such as rural women and youth. Another important barrier from the provider side is that given that context, that rural context, it's, costs to set up agent networks are very high. They have very difficult, they have a lot of difficulty in identifying what are the right type of profile, agent profiles to onboard to serve as agents. And there are a lot of, financial needs that agents and customers have that are unknown to providers because of that lack of historic exposure to this rural population. And that also comes accompanied with restrictions that sometimes unintendedly policies and regulations put in place. So for example, ID requirements that are just not feasible in rural areas, or agent requirements that just, you won't be able to find an agent, for example, that has a fixed business and has financial statements for the past 3 years, right? So if you put that as a requirement, you automatically rule out many of potentially good rural agents, just as some examples of policies and regulations that may hinder. And then you've got issues around rural infrastructure, right? There's a very limited cover of financial infrastructure, rural bank branches in rural areas that are still very key for agents to manage their liquidity. In addition to problems of ICT infrastructure that you normally find in rural areas. So all that makes it difficult for providers to expand and explain the current status of low penetration in rural areas among agent networks. And just to give you a feel, there is some data showcasing how much more expensive it is for providers to operate in rural areas. You find agent network management costs are higher, marketing costs are higher, and the cost of helping agents with liquidity management is also higher relative to urban setups. So this is a challenging environment, and what we at CGAP wanted to do is to scout the world, and we did a global industry consultation to see how providers were dealing with this. And based on promising leads and innovations that came out from that dialogue, we did deep dives in 5 countries where there were significant progress made in rural agent network coverage. So a bit of the results of potential solutions come from that analysis. On the demand side, and to address the demand issues, it really is important to go back to the basics and really make sure providers understand what are the financial needs of the rural population that providers have little exposure to, right? So it really implies understanding those needs and tailoring your products to address those needs, and find ways to go around social norms that prevent the participation of the more vulnerable, and also raise awareness about agents and among rural areas. And there are, to deliver, you may have the perfect bundle of products for rural customers, but you also need to set up viable business models that allow you to deliver them cost effectively, right? And so there's a lot of innovation around that, partnering up between different providers in a way to aggregate financial and non-financial services that are of value to these rural agents. On the policy side, there's a lot of flexibilization around agent network or agent profile requirements and ID requirements, for example. And there's also quite a bit of work around sharing rural infrastructure among various providers and investing in, let's say, low-cost digital technology that can be applied in rural areas. Now, there's a lot that we've documented around potential solutions that we don't have time for in this webinar. So we'll be right now just honing in on a couple of these solutions to give you a bit more flavor about what it means. And we would encourage you to look up on our upcoming focus note that CICO will publish, where we will go deeper in each one of these solutions. So going a bit deeper on the demand side, it really is about figuring out which is the anchor use case that has very strong traction in rural areas. And in the 5 countries where we looked at, we distinguished 5 potential strong anchor use cases that serve as the initial motivation to make the necessary investments on, business model innovations and rural infrastructure that is needed. The first one is person-to-person payments that characterize markets like those in Kenya, for example, where it was domestic remittances that were so highly demanded in rural areas that it created enough of an incentive for providers to invest. Like in the case of Kenya, it was Safaricom and its M-Pesa who were the first players in capturing that niche among lower income customers. There are other setups where it's actually the government to person transfers, those public subsidies the government wants to send out to rural areas that are big enough and have so many beneficiaries that become a very strong incentive for the industry to make necessary investments. And in other parts of the world, like in China or more recently Indonesia, e-commerce has been a driving use case in rural areas as e-commerce penetration increases in those areas, and they can be a good anchor to start delivering DFS and making agent networks viable there. But no matter what the anchor use case, the strategy that we see as these countries evolve and these agent networks evolve is that you design additional services around them. And defining what that right mix is requires a lot of intelligence about the demand so that you are able to design the right product mix that you can offer that generates more transactions at the agent level and makes them viable. So connected to that idea of adding services to the mix based on an initial anchor comes the type of business model innovations that we've seen, where we go from, your traditional agent network model that works for a single provider that offers 2 or 3 products, and those agents facilitate CICO transactions associated to basically, let's say 1, 2, or 3 products tops, right? Your traditional airtime top up, bill payment, P2P transfer, and that's it. So the application for the customer of CICO, why would a CICO customer want to do a cash in or cash out, is associated to a very narrow set of use cases. And the innovation, the business model innovations that we've seen that have sparked a lot of rural outreach is when providers are able to come up with a model, and these models can change a lot from region to region, but they ultimately all add up use cases that enable more cash in or cash out applications, so that your customer can do a cash in for P2P transfer, bill payments, airtime top-ups, do a savings deposit, buy inputs or extension services, or buy goods or services sold online or in a given platform. So that boosts the demand for cash in and cash out at the agent level and makes that agent viable, even if that agent operates in low population densities, right? How to do that can be varied, and this is something that we go deep in our assessments, and we can comment more on in the question and answer stage. And then there's also policy and regulation type of good practices that help bring solutions. So there's a very strong public sector role in enabling rural agent expansion. For example, you can provide, governments can design or have designed programs that help providers and agents kickstart their operations in rural areas, either through, subsidizing partially their operation costs for a moment of time, say 2-3 years. So just so that they can start operating and start a learning curve on how to develop a model that works in rural areas. Provision of tax credits and rebates, and the setup, for example, of innovation or R&D grants, like challenge funds, right? That really support that research and development process that every provider needs to do to figure out what is the right need that you want to cater, what is the product mix that you want to put together, and who you need to partner with to deliver it. That's very costly, and it's very hard to expect providers to do by themselves, given the uncertainty of the result, right? So public support is critical to accelerate that and catalyze that. Other big areas of support or ways to support is by, initiatives such as the one Paul mentioned about digitizing G2P, or even P2G services, right? So if you add that G2P delivery to the existing, service offering from the private providers or public providers, that generates more transactions at the agent level and helps with viability. So in a nutshell, these are some of the innovations that we've seen have come through and make a big difference in terms of rural agent outreach. And now I'll pass it over to my colleague Alice that will reflect on, okay, given this innovation, what is the role of an external funder? Why is an external funder needed to accelerate these innovations at the country level? Alice,
Thanks, Emilio. Yeah, thank you, Emilio. So it's great because you did introduce a lot of innovations, as you're saying, that could help advance networks in rural areas. So those are all good news. The solutions exist. But if we're here today, it's because we still need development funders to help promote those solutions. Why? Because market actors, such as the GFS providers, sorry, that's not where I want it to be, here. So why do we need development funders? Because the market actors who are supposed to implement those solutions, GFS providers, policymakers, regulators, and even customers, often lack the incentives or the capacity to test the solutions and to implement those that will work in their countries. So this is why in many markets today, we remain with inefficient distribution or gaps in coverage. Let's start with looking at the GFS providers. Why don't they implement those solutions? Emilio already shared some of the constraints that they face. In terms of incentives, well, actually in some countries, providers might not even be aware that there is more to be done, that solutions exist to expand their distribution networks. There can be a lack of awareness. If they're aware, maybe they're not willing to implement those solutions because, as Emilio really highlighted, those solutions require innovative partnerships. They will require providers to go out of their comfort zone, partnering with institutions that they don't really know or trust, such as FMCG distributors or ag cooperatives or fintech startups. Even if they partner with them, the solutions are not really easy to implement. They require a test and learn approach with uncertain financial returns, at least in the short run. So most of the providers are actually reluctant to invest, especially if they're the first ones, given the free rider issue, meaning given that competitors could then free ride on the network that they created. So we have many incentive issues at the provider level, and we also have capacity issues. Even if they have the incentives, they might lack the capacity to develop the solutions. They really need to understand the demand. That was the first point Emilio highlighted. This need to understand what rural populations need, and it's very different compared to urban populations. So they need to spend time, invest money in understanding this, this market. They also need to develop innovative business model, test the type of agents that will match the needs of their rural customers, for instance, test new way to recruit agents, to train them, to manage them. So all of this while complying with the regulation. So a lot of capacity issues at the provider level as well. And speaking of regulators, also have to do a lot in terms of regulations, policymakers also in terms of building the infrastructure that Emilio just described. So why aren't they improving the regulation or designing the incentives that Emilio mentioned to encourage providers? Why aren't they building into or strengthening the infrastructure? Well, because they face their own set of incentives and capacity issues. For instance, on the incentive side, they might just fail to see why CICO networks are important when talking about digital services. We saw with Estelle's presentation that it can seem a bit counterintuitive. You know, why do you need in-person networks to promote digital finance? So it does need a bit of understanding of the issues. They might also fail to see what is needed to develop the networks. Why is a specific, a good ID system needed? Why is it complex to recruit agents? Or simply, maybe they just do not consider them as a priority. Maybe they don't see the link between agents, financial inclusion, and all these development goals, socioeconomic goals. And even if they have the incentives, maybe they lack the capacity or the resources to develop the solutions. And even the customers themselves, they might lack the incentive or capacity to adopt the DFS solutions once they are developed. For instance, very often what we see is that customers are very satisfied with cash, and they can fail to see how agents and e-money would help them. So going back to this diagram, the role of funders is not to develop the solutions that Emilio quickly described in the previous presentation. It's really to build the incentives and the capacity of market actors so that those market actors will develop those solutions. To do so, they can build awareness, share global knowledge, advocate for change. They can help develop a stronger understanding of the local market needs, and then they can help build the capacity and share the risks, the cost of testing local solutions. So let's look at what it could mean. If we use those 4 groups or 4 functions that Emilio described that are critical for agent networks: demand, business models, policies, and infrastructure. There is a wide variety of possible interventions. For instance, at the bottom, when you look at raising awareness, funders can advocate, they can share knowledge, they can help convene local market actors, they can advocate for rural infrastructure. About local market knowledge building, they can fund market research, for instance, to better understand the need of the rural population. They can raise awareness on constraints such as social norms. They can create networking opportunities, help foster public and private dialogue. And building capacity, a lot can be done here, from the capacity of clients, you know, with communication campaigns so that they understand what's available and they know how to use it, and to the capacity of the providers on developing their distribution model, their products, etc. They can also work with regulators and policymakers to improve the regulation, the infrastructure. So let's focus, maybe, because we don't have time to look at all of them, I will just focus on some of those projects or of those interventions, taking a few examples. Let's look first at the advocacy on the demand side. So as Emilio was saying, stimulating the demand is very important to trigger interest, to raise interest, to create incentives for the providers so that they start looking at this market and building solutions. So funders can advocate for the digitization of some of the use cases. And you know, when we talk about development funders, very often we focus on funding, but actually advocating, sharing knowledge, convening different actors in neutral spaces are key instruments of funders. There are really key instruments in this toolbox to trigger change. So I'm going to take a bit of time talking also about these instruments, even if they're not directly funding. So advocacy here. Of course, funders have a key role to advocate for CICO network. As we already say it can be a bit counterintuitive. It's not always obvious for market actors why this in-person physical distribution network is important to promote the digitization of services, to promote the digital economy. So as funder, you can help spread the word saying that CICO networks are really important. But beyond this overarching advocacy, funders can also advocate for specific use cases. For instance, the digitization, what we have on this screen, the digitization of G2P. That will help stimulate demand and create incentives for providers. So like Emilio was saying, for instance, the digitization of G2P has driven agent network growth in many countries. And we can say that the difficulties of distributing aid during the pandemic has already been a strong advocate in favor of building these agent networks, but there is still a lot to be done. So funders can continue advocate for for building agent networks. For instance, here we have two examples. We have the World Bank and the Bill and Melinda Gates Foundation. They created the G2PX program in 2020 to accelerate digitization. In Tunisia as well, GIZ launched the Digital for Reform program. And one of their components is to advocate for municipalities to digitize the P2G payment. And this will also will help incentivize everyone to work on a distribution network with agents. Another role on gender norms. Funders can help raise awareness on gender norms. So either directly, just to raise awareness around the social norms and how they can create issues for those who can use or those who can become agents. They can also help pilot new products with providers or new distribution models that work around the norm, and they can even help change the norm by co-funding a campaign or drafting new regulations. Another example of a non-funding, non-financing tool is convening. And this is a very important one because you remember that we highlighted the need to create new types of partnerships between providers and network managers. So we will need to put together people who don't know each other. And for instance, here we have the network of FSDs. They play the critical role in many countries, helping potential partners to meet, gain trust in each other and learn about different models to work together. Another example can be technical assistance to regulators. That's more typical to what funders are doing. So helping regulators draft, for instance, new eKYC regulation. The infrastructure. So this is not as directly linked to agent networks, but it can be very impactful, building the real infrastructure in terms of ID, connectivity, liquidity management, data infrastructure. And here we have the example of the World Bank Group with the ID4D initiative, which is aiming to raise awareness on the transformational potential of digital ideas and helping Morocco build their ID infrastructure. And this will have a very positive impact on mobile money and agent networks. A last one, sharing piloting costs. You know, at the business model level, we said that it's risky, it's costly, and so it might be useful, very helpful to support providers in testing those new business models. So here, sharing the piloting costs, we have two examples. USAID, and Paul already mentioned that they supported DFS providers to test models by offering training and technical assistance to DFS providers in Liberia and Sierra Leone. And IFC is also another example. Not only providing TA, but also investing with equity in providers that were developing the network, like Fino India and Zuna in East Africa. And here I wanted to pause quickly and see whether Josek from IFC wanted to tell us more about this.
Yeah, thank you. Thank you so much, Alice. Yeah, so basically, our experience has been that, you know, in many cases, many of the providers, this is really new territory to them. And, you know, they may be stretching themselves beyond what they're comfortable with. And so as an institution, what we've done in a number of countries, you know, including Uganda, Mozambique, Tanzania, and other countries, is basically reducing the discomfort of some of these providers in these markets, so that they can actually support expansion, robust expansion of their agent networks. And sometimes, you know, basically what would happen is that in many of these markets, the institution would like to scale up operations, but they also would like somebody else to kind of help them work along the journey. We've tested, in some cases, we've worked with providers that have, you know, basically different agent management platforms, which have actually helped accelerate, you know, adoption and just understanding and analysis of the growth of agent networks. In some markets, what we've also done is because of our very specific role, we've actually brought together operators, financial institutions, as well as agricultural value chain providers. So if you look at West Africa, for example, in a country like Cote d'Ivoire, where we were able to bring together the three types of institutions in order to enable expansion of CICO networks in rural areas where cocoa farmers can actually access financial services. And sometimes it's easier as a funder to come in the middle, because if you leave just the operators on their own, they may not have that structure that can bring together the different aspects. So if you see an example of an institution like IFC, we work with different types of institutions. And so it's much easier for us to basically bring the pieces together. And similarly, talking about G2P and some of the work that we've been doing in different markets. So if you look at, for example, North Africa, where we are doing quite a big project with the central bank in Tunisia. And that, you know, that in itself, just enabling the government to see the opportunity, along with the other people that have, other funders that have worked in the market, to see the opportunity of extending a network across the country so that recipients can receive social payments that are being disbursed during the COVID-19 pandemic. That in itself shows, you know, the power that an institution like ourselves can bring to the table. Because also, you know, you work in multiple countries, and by working in multiple countries, you also bring experiences that you get from one country into another country at exactly the point of need. And that provides that market with the necessary tools. What we are also seeing increasingly is, as markets begin to transition, so for example, assuming, you know, especially in these rural areas, in some of these markets, at the very beginning, at the very best, is just the agent networks themselves, you know, beginning to grow, you know, and they can tap into their own resources. But as they grow, then they need to start accessing, you know, like equity or like debt, you know, from other providers. And so what we are also doing increasingly as an institution is trying to bring lenders to work together with operators in these markets by designing innovative financing solutions that can actually enable access to finance for these small businesses. I will pause there. Thank you very much, Alice.
Thank you, Josek. That was very useful because you actually gave a lot of examples well beyond sharing the piloting cost. So it's really, really interesting to see that IFC is already, well, has been involved for a number of years already in terms of convening, advocating, sharing knowledge, which is a big one, and providing equity, finding sources of funding. So this is very good, and it's a good transition to the my next slide, because you did highlight, you know, the importance of providing this support at the point of need. And this is also something I wanted to highlight, the fact that what is needed in terms of support will, of course, depend on the market development phase where each country is. So different solutions, different interventions will be needed at different stages. While maybe advocacy convening might be very useful, as Josek was describing it at the beginning, to trigger interest, to raise awareness, then it will be more about training, capacity building, build on the regulation, the models, etc., before going to the scaling up. Also, and this is very important for funders, you know, because sometimes we can have a tendency to try and replicate what worked in a country. But here, the solutions will really vary depending on the local dynamics. So for instance, you know, if you look at who led the innovation, it will vary a lot depending on the country. In Kenya, it was MNO-led DFS providers. In Colombia and India, it was banks. In China, it was DFS providers led by e-commerce firm. Even if you look at the Anchor use case that Emilio was describing, so in some countries like Kenya, it was P2P, urban to rural remittances, but in China, it was more like e-commerce, and in Colombia, India, it was more the government, the G2P payment, the G2P transfers. So the local dynamics will change and impact who will get involved. And so you as funder, who you will work with. We cannot really try to just replicate what works somewhere else. We need to develop the solutions that will work in these specific countries. So just concluding, we know the solutions. They will be tricky to implement. So it will require funders to really take the time to understand the context and to test the solutions. It is likely that some interventions will not lead to the expected development outcomes, or at least to the expected outcomes in terms of network development. But this is part of any innovative process. And it will contribute to global learning on this topic, so it's never lost. I think building agent networks is not an easy task, but it could significantly advance your development goals. I will stop here and we'll open the floor. So I will give the slides back to Estelle so that we can open for discussion. Thank you.
Estelle, your microphone is not.
I'm sorry, I was muted. I apologize. So thanks, Emilio. So we're Q&A time. There's been already a few questions in the chat. Some of them has been answered, but we may have take a bit of time to discuss this verbally. We've put up a few questions on this slide as we're interested in discussing with funders in particular, you know, their experiences. And as we are also trying to convince, you know, other funders to play a role in this area. So be curious to hear from the audience, you know, how important rural CICO networks is or has been in your current portfolio of work. What are some of the challenges and knowledge gap that prevent you from supporting this area of work or supporting further this area of work, and what it would take you to design projects in this area, and ultimately how can CGAP help you? So you should feel free to answer any of these questions in the chat box. What I would like to do now is actually invite Dave Kim from the Gates Foundation to reflect a little bit on the Gates Foundation's own experience in working in the CICO area and promoting rural agents network. So Dave, if you can say a few words, we are welcoming you.
Thanks, Estelle. And hi, everybody. This is Dave from the Gates Foundation, and I lead our work on cash and cash out networks. So first off, like, it is so wonderful to see a lot of friendly faces and names here and to have this conversation around this really wonky, but really important topic like cash in, cash out networks. And at the Gates Foundation, and specifically within the Financial Services for the Poor team, we believe that CICO networks are that crucial building block for digital financial services. And when it comes to the work that we're trying to do, we're trying to figure out how do we ensure that people, especially low-income rural women, have an easy, affordable, and trusted way to interact with these different digital financial services, and have that on-ramp to a broader set of relevant digital financial tools through that digital economy piece. And our work is really anchored around three main pillars. So we've invested around research, we've invested around advocacy, and we've invested around innovation. And collectively, these pieces all work together against this goal. I love that slide where you had, hey, this is a journey. These are different ways that funders can get involved. And while I was looking at that slide, I was reflecting, oh boy, at the Gates Foundation, we've peppered in a bunch of those things already. But if I had to say one thing, it would be that we need more. Like we need the community to come together around this topic. And I'm really quite keen to figure out what are the different unlocks that we can pursue together. And I really appreciated Paul's point at the top of this call, where he was bringing up USA's example during the Ebola crisis. And when it comes to cash in, cash out networks, it's not only about facilitating conversion of money in different places around the world. It's not only for DFS, I guess that's what I'm trying to say. There may be other really interesting narratives that we should collectively explore, whether it's figuring out ways to support emergency response, whether it's for emergency preparedness, whether it is for the digital economy, getting closer and more relevant for the majority of the population within a given country. I think there are a lot of really interesting narrative arcs that we need to pursue. This is not to say that the DFS angle is going away by any means. It's actually quite core and central to this. But I suspect we'll need a bigger tent if we want to get more people involved. I'm always happy to share more. We're doing some really cool, innovative work. And like always, so glad to partner with great partners like CGAP, at BCG, and IDEO, and beyond. So thanks. Happy to share more, but I know we're also running out of time. Thanks.
Thanks, Dave. Actually, a quick follow-up question for you. You said in your introduction that you'd like to see the community, come together and really tackle this issue of rural distribution. And so here we have a platform of funders that are here together and looking interested in this issue, and you have a great deal of experience working in this area. And so if you could reflect a little bit on some of the challenges that you have faced as a foundation, and kind of think about ideas of lessons learned to share with your peers, your peer funders, in terms of what they could do, or how would you like them to be engaged based on your own experience? That would be helpful.
Oh man, so a lot of issues, a lot of barriers, probably just because of me. But maybe I'll just say one or two things and then end with an invitation, right? So some of the barriers that we face is that we live and operate mostly in Seattle, Washington, here in the United States. And even beyond COVID, it was hard to figure out, hey, how do we go from this global dialogue to like the actual reality and what's happening? And I really appreciated the point that Emilio and team raised earlier, in that sure, there are global patterns, there are global macro themes we can talk about, but you have to make sure you're designing for the local market. And that's why when I look at the 5 countries study that CGAP did earlier, you get to see, wow, there are a bunch of different ways of tackling this problem. And we're seeing a lot of different barriers that are coming in the way. And I think the devil is really in the details. So I think that's always going to be a challenge for us, but I think that's why it's that much more important for us to work with a network of different partners who are interested in this. And those partners are not only funders, but they're also private sector partners, they're folks in government, there are civil society organizations, you name it. So with that, like my invitation is that we have started to bring together a global network of people and organizations who care about CICO. And we have started to set up learning sessions on a pretty regular basis. I know that Emilio and the BCG team have raised their hands and volunteered to go next. So this is more of an invitation. If you'd like to join these calls, please let me know. I'll drop my email address here in the chat. But I think it's only by coming together as a community where we can start sharing patterns, but also recognizing the uniqueness of the markets we're working in, we'll be able to get something practical. So yeah, I'll pause there.
Thanks, Dave. Now I would like to invite Mike McCaffrey from UNCDF to also share a few words on UNCDF's own experience in promoting and developing CICO networks. Mike, are you around? Are you here?
I am. Thank you.
Hi, please go ahead.
Sure. Yeah, I mean, a who's who of the people who think about these tough distribution network issues. So it's a pleasure. You know, we've been looking at this issue for a long time. And, you know, I think the kind of high level piece of advice is, well, I mean, one, you know, like looking at it in kind of an East African context, rural means something very different depending on where you are, right? And so really kind of defining that, what that is, right? Because that's like 60 to 80% of the population, depending on the country we're talking about. And some of the kind of low-hanging fruits in kind of peri-urban areas that have supportive infrastructure, yeah, we can work on the efficiency of the business model and extend services. You know, globally, kind of 50% of registered agents aren't active on a 30-day basis. So there's a lot of inefficiencies in that model that you can really work with. And we have a lot more kind of digital tools now available to us that help us do everything like Josek was saying, from liquidity management to agent selection, network design. But I also think, you know, we need to understand that at a certain frontier where economic activity becomes too low, where population density is too low, digital financial skills are too low, the infrastructure is not there, the roads go out in the rainy season, we're really talking about a public good. And, you know, we did some work, I don't know, 5-7 years ago to show that in some of those areas, there can be kind of these enclaves of economic activity that are supported by agricultural value chains, cash crops, where you can make things work in certain ways. You know, there's design kind of ways to do it. But other than that, when we push out kind of further to kind of refugee camps, you know, real rural, the business model is, you know, orders of magnitude off. And it's really a public good that donors have to, I think, not only decide to really lean into, but commit long-term. Because it takes a very long time if you're going to go in and really solve the infrastructure issues, really solve the digital skills issues, broker the types of partnerships that you need to operate there. It takes quite a bit of commitment. So, you know, we've been working, you know, with value chains here in Uganda, and we've, you know, the past, I don't know, several years, we've been working with a model called digital community entrepreneurs, where we're bundling services, not only kind of the SIM card cash in, cash out registration, but looking at kind of solar products, agricultural extension, agricultural inputs that can really give the type of revenue stream that you need over time to make it sustainable. Thank you.
Thanks, Mike. So I'm looking at the chat box. There's been a number of comments. Some of them I think we've answered a little bit. There was a question, and maybe something for Emilio, on the role of agents to onboard customers. That seems to be an important role. And if you could speak a little bit about that, and whether what do we know about it, whether it's actually a big role, especially in areas where it's, you know, it's really not well developed, and that could be an important role as well.
Yeah, I think it is an important role, and we've seen it be critical for the expansion and onboarding of new customers, right? New rural customers who have not used DFS before. But for an agent to facilitate the opening up of an account for a new customer, you really need to have a lot of things put together beforehand. And that's where we like to work a lot with policymakers and regulators, because you also need to develop a lower tiered, a multi-tier agent structure where you have low tier agents who are able to facilitate the opening of low tier accounts to mitigate risks, that, very important risks around customer protection, around AML, CFT, right, that are important. But if you develop the right type of risk-based tiering of agents and accounts, you will be able to have, this type of low-tier agents in rural areas who, may not be super equipped, super liquid, or super literate as you find in, urban strongholds. But that can follow a process that enables a rural customer to open a basic savings account with a specific limit that allows that customer to start experimenting with DFS transactions. So it's a really important onboarding mechanism, and enabling these low tier agents to open these low tier accounts goes a long way in ensuring what we hope to see, which is as agent networks expand, you do see an onboarding of new customers and more transactions per customer.
Thanks. There was another comment. And again, Emilio, for you, I'm just wondering if you could just add a little bit. Somebody spoke about some of the AML CFT requirements that could also be barriers to, agent network expansion. And through the research that you have done in the countries, have you come across like example of countries that have taken, governments that have taken steps to address that?
Yes. Yeah, it relates to my previous comment around creating that tiering of accounts and agents, which that tiering is really motivated by defining what is the right level of risk each type of agent can take. And thinking about AML and CFT in particular, what we found out is that if you're able to create a low enough account, a low enough tier of account, and a low enough agent in a setup where all of your CICO transactions are real time, that means that the money exchange is backed up by existing money in the system, either by the agent or the provider. There's very little risk on AML CFT, right? And if your limits are low enough, the exposure to AML CFT is significantly low. So that's why tiering is important. Setting up those caps in your account or your agent transaction size helps mitigate them. But it doesn't mean, that goes a long way, rather than just simply, forbidding low tier agents to open up a basic savings account, right? That's the balance that I think regulators have to go through in terms of what's the appropriate level of risk that agents can tolerate. And if you understand the aspect of that, cash in, cash out transactions are in most markets now real time, then the risk of AML CFT issues can be mitigated with lowering enough of the cap of your agent transactions or your wallet transactions, right?
Thanks. There was a comment, and I'm just going to make it as a question, and it's going to be for many my CGAP colleagues, but also some of our funder colleagues, about maybe the limitation of the kind of cost sharing and TA approach that has been taken to kind of work with, I guess, private sector actors, and in this case, agent networks or providers that have their own network, and whether sometimes it seems like, some of these large companies are really entrenched in kind of the way of doing things, and it's the TA and the cost sharing might be limiting, and there are bigger institutional change, organizational change that needs to happen. And so I would be curious to hear from anybody if there had been a successful experience in helping organizations going through important change management, and what the approach they have taken to do that. So, I mean, maybe CGAP has some kind of experience looking at others, but like if USAID or UNCDF, the Gates Foundation have also anything to say on this, you know, that would be helpful, or IFC also for that matter. Any volunteers? Paul, can I put you on the spot?
You can, although I was actually going to pivot
okay.
slightly, if you'll indulge me, just to an earlier thread of the discussion. One point I was going to raise, there was this issue of agent onboarding that Evo raised, and then there were a couple other comments which spoke to, from a donor's perspective, the importance of doing a diagnostic right at the outset to just better understand the status quo state of play. This is something that we did in Liberia and Sierra Leone. And incidentally, it's something that we were able to do because we were able to rely on the agent network diagnostic methodology that had been developed by the Helix folks based in Kenya, which had previously also been supported, of course, by some donors. So that provided the analytical frame by which we were able to pinpoint or situate ourselves in Liberia and Sierra Leone. And among the things that that wide-ranging diagnostic identified were how agents were onboarded, how agents were trained, how agents were selected. And then, of course, ultimately, we started looking a little bit more at liquidity also. But on the onboarding, it became apparent that there was very minimal effort by agents to onboard customers, very little outward focus, in other words, but there was also very little focus on onboarding agents and training agents themselves. And so, you know, what that meant from an intervention standpoint, obviously, but up against our programmatic resources available. And so then, but at least then we were able to go into our set of interventions knowing that, you know, we might not be able to do everything or address every pain point identified through the diagnostic exercise, but at least we can make that intelligent decision.
Yeah, thanks, Paul. I see well, a couple of things. I see Dave has his hand raised, but I also have been told that Mike McAfee from UNCDF might also want to answer the specific question I had on institutional change management.
Yeah,
so,
sure.
Yeah, go ahead, Mike. Yeah.
You know, I think like 2 points. One just to follow on Paul's is, you know, when we're talking about complex operations like this, we cannot confine our conversation to the supply side or the distribution side. As Paul's saying, we also have to look at the customer side, right? Because the first place we start with designing a distribution network is, well, what is it for? What type of customer demographic are we looking at? And what type of product are we trying to deliver to them, right? And that's going to change depending on kind of the rural dynamic or you know, the scenario in which we're delivering a service. And so we have to look at that use case. What do we think kind of the volumes and values of it will be, and that kind of stuff as well. So I think that's important to include in the diagnostic. I think, you know, in terms of change management, we've had like two, I think, important experiences. The first was kind of like early experiences in East Africa, where we were really looking at the interoperability issue. And so we were working with technology service providers to do the connectivity on the back end and kind of like the first generation of aggregators. But what we realized is, oh, we actually needed partners in the field as well to do the monitoring, quality control of the service delivery, liquidity management, training, that kind of stuff. And, you know, we kind of pushed on a string for a long time to try to get these kind of techie coder guys to also do this S&D work, which is, you know, oil and water. And, you know, we didn't, I would say, have much success with it. But I think it's interesting now looking at the market where there are multi-service providers who have kind of figured out how to do both ends of this, the back office and the front office, that are really kind of making a difference here. With the, you know, MNOs that, you know, run the mobile money networks, we, you know, had systems where we would have a champion within that system, and then that champion had to have kind of access to a C-suite decision maker. And we would work with that person on, you know, really understanding kind of the technical operations in the rural areas, the stuff we're talking about in terms of having this balanced growth between the agents and the customers, and then ensuring that they had the line to the decision makers. So when we needed to onboard new agents or whatever and fast track things, we could get that done. But, you know, fundamentally, I would say, you know, that can be pushed to the degree that kind of the business model continues to work. So economic enclaves, peri-urban areas, that kind of stuff. And beyond that, you know, I think there's been kind of limited interest, I would say. Thanks.
Yeah, thank you, Mike. Dave, you raised your hand, so over to you.
Thanks, Estelle. Yeah, I just wanted to follow up on 2 points that were raised here, and I'll just be quick in the interest of time. The first one is just picking up off of Paul's last comment, where we're talking about the agent experience. And I think this is just something worth calling out here. I love, for many of you who know me, I love seeing mentions of human-centered design. It's being much more intentional about what we're building and adapting it to the context. And here, I just think we need to double down a bit more on the agent experience, especially when it comes to onboarding, training, support, you name it. And what's pretty exciting is that we did some work with IDEO.org, which is a human-centered design firm, as well as with Driven Data, which is a data science company, years ago in Tanzania. And during that project, we're able to look at the transactional behavior of mobile money agents. And we found a really amazing insight or pattern, really, where in the first 14 days, depending on an agent's performance, you could predict whether that agent would be a high-performing agent or not. So from a designer's perspective, you're like, oh, that's super intriguing. How can we then design the best 14-day experience? Would that have any type of impact? What's been great is that over the years, that insight's been shared a number of times. And just recently, IDEO, through the Last Mile Money program, worked with PaySickit, which is a startup in Kenya. And they created a new onboarding flow based off of that initial insight. And what's amazing is that for the agents who went through that onboarding, that redesigned onboarding flow, they were able to increase their income by 50%. And if you think through the viability element of all of this stuff, seeing that bump in agent revenue is really, really interesting and intriguing. So that's just one. I think that we need to really focus a lot more on the agent experience. And let's definitely build in a gender equity lens to that work. It's striking we haven't talked much about that today. The second point that is worth calling out is, okay, let's go beyond the urban enclaves, as Mike was saying, and how do we go further into rural frontier areas? And at some point, the math just doesn't work, right? I think BCG, Microsave, and a number of partners have done amazing work in looking at the economics of these different models. And at a certain point, these current models just don't work from a math perspective. So what do we do, right? I think there are a number of things we can do. One is we can improve that existing model, but my hunch is that will give us a marginal gain, right? We'll be able to extend a little bit further into a rural frontier. Beyond that, again, Mike said something really great earlier, like distribution just for distribution is not very compelling. What are the things I gotta write on top, right? So can we think through that? The other thing that we need to think through is, can we reimagine the existing model? So think through, how do we provide CICO services? And if we go with that, that may look a little different from how do we create new CICO points? The other piece that is worth considering, especially for the donor and funder colleagues here, is we definitely need to think through CICO, or really distribution, as essential infrastructure. And if it is in social infrastructure, how do we start mobilizing funds and support for that? At some point, it's a choice, right? We can say, hey, is there going to be a commercially viable model? Yes, to a certain point. At that point, what do we do? I think that's the big question that we need to collectively face. And I think it's going to involve both innovation. It's going to involve both innovation, advocacy, as well as new forms of partnerships.
Great, thank you, Dave. You got a last word for this session, basically, which I think was just also on point and leaving the audience with some additional food for thoughts. In terms of kind of like CGAP, I mean, this is the first engagement with the funder community. This is definitely an area where we want to support CGAP members and the funder community more broadly speaking, in terms of what they can do to support rural agent network development in a way that is going to be impactful or more impactful moving forward. So building off, the work that CGAP is doing, but also building off the existing experience that, we've shared today with you. What I heard today, it's true, we didn't speak about gender. So maybe this is another topic for discussion later, that we have to really also, look at the gender aspects, whether it's from agents, but it's ultimately to benefit women and women's financial inclusion. So this is something that we probably need to discuss, remembering who we're solving for, what are we solving for through agents. And then what I also heard from the discussions, that this is a long game. So funders need to be invested in this, in the long game, especially if we're talking about rural agents, and then local context is key. So investing enough time, understanding of what's happening on the ground, and try to then tailor solutions accordingly will matter. So we'll continue discussing with you. We'll have a number of engagements, and also there's going to be some publications coming up. So stay tuned. And if you want to be talking with us about your work on Agent Network, feel free to get in touch with us via social media, or if you have our email address, then you know where to find us. So thank you very much again, everybody, and have a good rest of your day.